Treasury yields coming down from fresh 16-year highs yesterday. Our next guest says the yield on the 10-year could hit 5%. Join us right now to talk about that. And, of course, cryptocurrencies. Dan Morehead is the founder and managing partner of crypto hedge fund Pantera Capital. Dan was formerly the CFO and head of macro trading at Tiger Management. Good morning.
Thanks.
Okay, so let's talk crypto in just a second, but let's talk about bonds because it very well may be that the bond market will have an impact, I imagine, on crypto. But where do you really think we're headed, and what does this next 12 months look like to you, given what we've even seen in the last week?
Yeah, I think we have a failure of imagination that all working-age people have never traded in a rising rate environment. I came to Wall Street in the 80s, and it was already 6 years into a 40-year bull market, and everything gets bailed out by the Fed lowering rates for the last 40 years. We're in a different regime, and the rates, 2 years ago, I predicted when Fed funds were 0 and the 10-year was 1.3, they'd both go to 5 at least. We're here. I think they're going higher. The normal real rate for the Fed is 1% over inflation. We're not even there yet.
Right.
Wage inflation is double the Fed's target. We have record labor strikes going on right now. So the Fed has to keep doing more. And the 10-year note is right now we're flat to Fed funds. It's typically a premium. It's typically at 2% above inflation.
Earlier today, you had a guy on from Bob Michael said that inflation's, what are you saying inflation is now? What number are you using?
Well, so core inflation is 4.4, which is more than double the stable prices that the Fed uses.
He said inflation's already at a point where rates are too high. That's what he was saying.
Oh, inflation, they're supposed to keep it under 2%. And it's at 4.4, and wage inflation is 4.5 and increasing.
Right. The question is, when you have, like a Barry Sterling will tell you that, like, what he would call real inflation, he would think is, when you really calculate the full thing, he would say we're already there.
Yeah.
And the question is whether you think the Fed either thinks we're already there or you even think that's real.
Already at 2%?
Yeah.
So the funny thing is there's an owner's equivalent rent thing in inflation, and it takes 2 years to fully play through. And even if houses stayed stable for the next 2 years, it'll still go up 1.1%, according to the Atlanta Fed. So there's still a lot more inflation from 2 years ago that's piped in. And the Case-Shiller Home Index is still at record highs.
So if you're right, we're talking about increased rates, nobody lowering rates in the next 12 months.
Yeah. Yeah, and maybe for several years, right? Like, I think that's what people are having a hard time thinking about, is rates could stay up for 5 or 4 years.
If that's true, then equities are wildly overvalued.
That's true.
That's true.
It is true.
Okay. You would think Bitcoin would.
But then I would think that crypto would be wildly overvalued too.
Yeah.
So equities probably are overvalued because the PE is the same level it was when rates were crashing, but now rates are much higher. And if you took the normal equity risk premium for equities onto a 5% 10-year note, they should be 23% lower than today.
Wait, equities should be 23% lower today?
And
you're talking about the S&P?
The S&P, yeah. And if you took it compared to its 50-year average of equity risk premium, it'd be 43% lower. And I'm not saying 43 is going to happen, but we got to keep in mind there have been 2 13-year periods that equities didn't go up in the 2000s and in the 70s, 80s. We could see that.
You think 23% is going to happen, if not 43?
I think equities are going to go down for the next few years. And that's why crypto is relevant, because it's not tied to interest rates, and that's pretty rare, right?
It kind of is tied to risk.
You need the Fed opening the spigots for Bitcoin to go up.
Well, the Fed opening the spigots in 2020 was unambiguously wonderful for anything that had a fixed quantity.
It hasn't been an inflation hedge.
Yeah. So the thought is it was highly correlated last year, and
to what?
So Bitcoin is a proxy for
risk on.
NASDAQ is what it was correlated.
Risk on.
Yeah, right. So it was a very risk-on asset until the middle of last year, but I think that was correlated with or connected to a lot of super highly levered things like BlockFi, Celsius, FTX, and those are once in a generation weird occurrence. They're in the past, and this year the correlation of Bitcoin to the S&P 500 is only 0.2. Historically, it's 0.1.
So what is it correlated to then?
So it's like, some people call it digital gold because it's kind of its own thing. It's not interest rate related. Obviously, bonds are interest rate related mathematically, equities, real estate.
I think people are waiting for a cut. And every time they think there might be a cut and the Fed starts easing again, that's when Bitcoin goes, because its fiat becomes less valuable.
I agree. It is definitely cyclically connected to things like that.
Okay.
But my overall view is we're in a 20-year secular bull market in blockchain, right? It's a very transformative technology. It's going to change so many different things. And so, yeah, it does squiggle a little bit with what the Fed does.
Is that it? There's crypto.
Yeah.
There's some people today who would say there's crypto and then there's Bitcoin, right?
Yeah.
And that they should actually be completely separated. We shouldn't even have them on the same screen together.
Yeah.
Do you believe that?
Well, so Bitcoin is the first brand of blockchain. There's Ethereum and other brands of blockchain. Bitcoin has worked for 14 years, 24/7, no downtime. It's amazing. Like Facebook goes down, everybody else, we just heard about Clorox getting hacked. Like Bitcoin's always worked, so it's great. It has about 50% of the entire market cap. But the other cryptos are very important. There's a project called Arbitrum that's helping scale other cryptos. Ethereum's worked really well. They did a merge last year. Nothing happened. They changed software for 200 million people overnight, and it all worked. That was the news story, and no one wanted to talk about that.
If you think that equities could come down 23%, or maybe should, just based on historic valuations, where do you think Bitcoin should be valued?
Yeah, so it's a great question. We talk to asset allocators all the time. If you're thinking put money to work in bonds, I think that's pretty dangerous. Put money to work in real estate. Real estate is probably coming off all-time highs. Equities, I think, are overvalued. That does leave a couple of asset classes like real commodities and blockchain. Blockchain is $1 trillion asset class. So most institutions have essentially zero exposure right now. They should, dial it up to a couple percent.
Which gets Bitcoin itself to what level? I mean, if it's 27.7 now.
Well, Bitcoin has a 14-year trend growth of 145% a year. That's kind of my general forecast. It'll just reassert that, and every year it'll more than double.
Every year it'll more than double.
It's been doing it for 14 years on average, obviously. So
nothing else to close.
If it's digital gold, when does it become like gold and hit a...
And it never go up again.
Yeah.
Oh, yeah, that's funny. It's like 20 years when everybody has it. Right now, most institutions really have essentially, zero exposure, very, very small.